Hey, good morning, everybody. It's Thursday Morning Live, and we're back. Hey, we took last week off. We weren't here last Thursday. We had the multifamily summit. Boy, I'll tell you what a great event. So, Thursday, Friday, Saturday last week, I hosted over 30 speakers talking about multifamily investing, everything from the novice and beginner to the more experienced and advanced. I'm so grateful that it went as well as it did. One technical glitch that I don't even think anybody would have noticed. So I was excited about that. It was great. I hope everybody's having a great week. And I hope that you are focused and intentional about what you're working on. If we start our day every day intentionally, we tend to get the results that we're looking for, don't we? So as you continue to build, as you continue to grow, keep those intentions at the forefront and work towards accomplishing those, and you get there, whether it's more sales calls, whether it's underwriting more deals, whether it's acquiring more deals. We just wrote a nice offer on a property. I'll tell you a little bit more about that later. But one thing I want to just comment on, if you are listening live today and you want to make a comment, you want to talk to our guest, please drop it in the comment box. We'll get those answered for you. If you're here, just say hi and tell us where you're from. My guest today, Isaac Schaefer, he is from Central Illinois. He is with a company, A People Brand. We're going to ask all about that. Isaac is in the alternative investment space, so he underwrites assets as well as raises capital. So we're going to get into some of that this morning. I'm excited. I've known Isaac for a while, and great guy, good spirit, and we're going to dive into that. Before we do, though, I want to remind you, if you were part of the multifamily summit last week, right after the summit, we went into a 5-day multifamily challenge. If you have not registered for it, get registered for it. You can catch up and listen to all the recordings. They're posted in a Facebook group. Go to multifamilysummit.com. I'm sorry, let me back up. multifamily22.com/challenge, and that'll take you right to that page. So it's multifamily22.com/challenge. It'll take you to the page. You can get caught up. Tonight, Bryce and I are going to go live. We're going to go live in the Facebook group, but on Zoom. If you want to be part of the live Q&A tonight, make sure that you get me a direct message, and I'll get you the link to log on to that. So let's get going. Let me bring our guest in. Isaac, good morning.
Mike, good morning. How are you?
I'm great. How are you?
I'm doing great. How's the Windy City this morning?
That's funny you bring that up, because I was just going to ask you, what's the weather like in Central Illinois? It's actually the sun's coming up. It's kind of nice. It's a great fall morning. It's probably just about 50 degrees. And, yesterday was a little cloudy and gloomy, but today it's really nice. How about by you?
It's great. Yesterday was actually a beautiful day for us. Not a cloud in the sky. Just one of those, for Midwesterners like myself that actually love the Midwest. Just quintessential, nice, sunny fall day, slightly warm, but it had just rained, so the leaves were damp. So you kind of got that, fall wet leaf smell all day, and it was a great nostalgia sort of day. So yeah, I'm enjoying it.
Yeah, what was funny? What I noticed that was kind of funny this year was the leaves on the trees were that brilliant color, that fall beautiful color. And then was like that fast that it was over. I don't think it lasted a week before they turned. I think it was just so cold there for a while.
Yeah, ours we still have some color on our leaves here, but I've heard from people in multiple different states that fall this year, and people that live in deciduous forests where leaves actually change. They said that fall this year has been great for them too, as far as just the color of leaves, how bright everything was. So. Yeah, I just one of those years, I guess, but it's awesome. I love it.
Just that fast. Hey,
Yeah.
so let me ask you this. So one question I always start with is, in one word, what best describes you personally and professionally?
Yeah, I would probably say that word would be learner. I've always been a learner. My background is actually in medicine. I worked for 6 years as a physician assistant, almost 7 years in orthopedic surgery, doing mostly hip and knee replacements, trauma surgery, limb salvage, all kinds of stuff. And so, very high level medicine. And so, obviously, that requires a lot of learning. But I'm just a natural nerd and I'm naturally curious.
Okay.
And when I find something that I like or that I enjoy or that interests me, I just dive deep and I learn about everything that I can about it. It's actually somewhat of a problem because when I get on a new kick about learning about something, I spend a lot of time on my computer and my phone, and sometimes that annoys my wife because I'm not paying attention to the present. But we work through it. And Yeah, so I would definitely say learner. Basically, everything that I do in my entire life, whatever it may be, business, personally, spiritually, I'm always trying to learn. And I think that probably just comes from a place of staying humble.
Yeah.
Because there's a quote that I really love is that if you're humble enough, you can learn something from anybody. And so if you don't think too highly of yourself, and you don't think too low of other people, you can learn something from anybody. You just need to listen and keep your mind open and actually want to learn.
Yeah, I think that's awesome. I think that that's what keeps us growing, right? Is learning more. It
Absolutely.
just it becomes interesting. I've been doing what I've been doing for 30 years, but I keep learning. I learn from people like you. I love doing these podcasts and having guests on because I always pick something up that, makes more sense. So that's your background a little bit. How about what are you currently doing now?
Yeah. So right now, my brother-in-law and I, who's actually been a member of the podcast or of the live stream as well, and who also shares my name, Isaac.
Isaac.
Um, yeah, we started a business a little over a year and a half ago now, and it's basically a syndication business, and we syndicate primarily real estate, but also as of this year, which is kind of my main focus, is we also syndicate for small businesses, and we call it our brand name is called UR, but we have or varying agencies that focus on different things, and so the agency that I'm a part of is called UR Launched, and it's ultimately focused on launching small businesses that have capital needs, but also that have other needs. Maybe it's some marketing or some sales strategy, or getting connected to dealers or manufacturers for their product. Obviously, connecting business owners to capital, connecting them with personnel, with like high level personnel, like a C suite. Maybe they're trying to build out a C suite. So we really just do what we can to provide the value for these small businesses that ultimately launches them to the next level. And so that's kind of what I'm personally in charge of. But then I also do a lot of work on the real estate syndication side as well.
Interesting. So I have to ask, what makes you go from the medical industry, the medical profession, into, you know, business and real estate, or just business in general? What makes you make that leap?
Yeah, I mean, ultimately, this last year and a half, or rather the last 2 years, kind of leading up to that transition, and then since we made that transition, has been probably a period of the most concentrated growth in my life that I've ever experienced. Ultimately, what it comes down to is I naturally I wouldn't have considered myself an entrepreneur or a risk taker. I love medicine. I still love medicine. I had a great job. I worked for a great doctor, a great practice. I was paid well. I was treated well. I had no reason to leave. Um, but when my brother-in-law told me that he was starting his business, he didn't ask me to go with him. But as soon as he told me that he was starting a business, I felt compelled to go, and to leave my job and to go start a business with him. And he made no hints or made no intentions of actually asking me to join him. I just felt compelled to, and that that was odd for me because I know myself well enough that I shouldn't want to go do that. I shouldn't be compelled to leave my job that I've worked so long for, and that I've spent so much money, getting educated for. And I spent, I mean, over 12 years training in undergrad and graduate school, building a career in medicine. And so my natural tendency would be to just continue on that path. You don't enter a high level medical job and then decide to leave. So the fact that I was compelled to go or to leave my job was odd to me. And so ultimately that just led to a lot of prayer and a lot of conversations with God to say, why does it feel like my nature is changing? What are you calling me to? And ultimately, what is a sleepless night, probably 2 or 3 in the morning, and I felt like I was convicted by God in saying I'd always prided myself in making wise decisions, making the right decision, making the decision that made sense. I felt like God ultimately convicted me that I've made wise decisions because it was something that I could control. It was something that I could see. It was something that I could conceive of and conceptualize and look into the future and know exactly what was going to happen. And I felt like I was living my life with a very closed hand. And there's only so much that God can do when our hands are closed. And so I felt like I needed to leave that and open my hand, and whatever he put in there, I would leave it open. And if he took it out, that's fine. He's probably going to put something better back in. And so that's ultimately what sparked it.
What's cool about that is that that really kind of gives you the focus that you're unattached. That
exactly
you're following the leading, you're following the knock on the shoulder, and you're unattached. So either it's going to work or it's not going to work, right?
Exactly. And I've felt more free, even though there's so many things that are up in the air, and my life is so less predictable than it was before. It's hard to know in real estate. Things are lumpy, and you don't know when your next paycheck per se is going to come, or when the next deal is going to come by. You've underwritten all these deals, and so far none of them have come through. So there's so many things that are up in the air. But I felt more free in the last year and a half, and I felt like I feel like I have so much more vision, and just an understanding that my life could be so much bigger than it was before. Because before I was going to work my nice, it wasn't a cushy job, it was a hard job, but I was going to work my nice, well-paying job, provide for my family, build up a good retirement, and live well. And now my life doesn't look like that, and it looks a whole lot better and a whole lot bigger, but also a whole lot more unknown. So
yeah, boy, that's interesting. I've been saying that for a while recently, that I just don't know what it's supposed to look like. But then all of a sudden things start to come together, So let's talk about underwriting a little bit. Obviously, a year ago or a year and a half ago, when you guys started a people brand and you left your profession and joined forces with Isaac, the market was a much better place than it is today. How are you looking at businesses, at real estate today versus how were you looking at things a year ago when you made that leap?
Yeah, there's a lot of things there that we could unpack. So yeah, I think a couple of things. One, I would say that there's a difference between what the market sentiment is and where real estate prices are and where interest rates are, and equating that to a good market. Because people say, a year and a half ago when properties were trading at 4.5 caps or 3 caps in some cities, and and it seems like there's no way to lose. I think the problem is that attitude comes from an understanding of real estate that is not focused on the fundamentals of what real estate actually is. And so if you continue to always underwrite deals based on the fundamentals of real estate, and ultimately one of the things that we like to use that's almost the most important to us is unlevered yield on cost. That doesn't change. regardless of if interest rates are down at historic lows or if they're at 30-year highs.
Yeah.
Unlevered yield on cost tells you something about a property that is more important than interest rates could ever tell you. Interest rates help. Adding leverage helps, but it doesn't change the nature of what real estate is. And so ultimately, I don't think this is a bad market for real estate. This is frankly can be a really good market for people like us because deals are retrading, and we're seeing that so much. We're brokers are coming back to us saying, "Hey, like you were interested 6 months ago. How about now?" We're like, "Well, you know, market's different now, so lower your price by several million, and we'll talk."
Isn't it
And
funny? 6 months ago, you couldn't get a broker to return your phone call, and now I have 3 or 4 brokers call me every day.
yep,
It's 6 months ago you couldn't even get a broker to return your phone call.
exactly.
It's
Yeah,
interesting, and the deals are out there. Here's one thing that I tell people all the time right now is this is a great time to position yourself in the front of a bull market because
mhm,
I know these markets cycle, right? And
mhm,
we're coming down off a bull market, but we're going to go back into a bull market. Get positioned today to ride the front wave of that bull market because that's where a lot of money is made and a lot of you grab that upside coming back up.
exactly. And that brings up a really good point that we also think a lot about, especially in times like this, is basis is forever,
Mm,
debt is temporary. And
yeah.
so that's why, even though this is considered a bear market in real estate, if you can pick up a piece of property for 20, 25, maybe even a 30% discount from where it was even 6 months ago, that lower basis that you're establishing is far has a far greater impact than buying a property with 3% fixed debt for for 20, 25 years. Far greater, because
Right.
if you can make a deal pencil at 6, 7, 8, even 9% interest rates, and you're still cash flowing, I have no problem with that because you're probably buying that property if it's, say we even get up to 8 or 9% interest rates, heaven forbid. I don't think we'll get up that high, but even if it did, and you can buy a property at 30, 40% discount from where you could have, at 4% interest rates, and that sucker still cash flows. As soon as those net rates come back down, you go from an 8 or 9% and you're cash flowing down to a 4 or 5% rate, and you are making a lot of money when you refi that property.
Absolutely.
So it's all about how you frame it. And I think a lot of people got comfortable with rates at historic lows, and it just lulled people into a sense of false security that it's not about the rate. It's about the underwriting, and it's about the actual property itself. And it's about the price that you're paying for it.
Yeah. What's interesting is when I got into the real estate business, and I'll date myself here a little bit because it's been a long time, uh, rates were double digits.
Mhm.
And, today they're still historically low. Um,
Absolutely.
People get too hung up on rate and they get thrown off by 1/4% or 0.5% when in the big picture over long term it doesn't matter. um, you know and interesting comment, I made a comment on somebody's LinkedIn page yesterday. They said, oh, nobody, people aren't buying because interest rates are too high. And I said, yeah, they might be high, but they're going to come back down. So buy today and refinance tomorrow.
Mhm.
You
Yeah.
know,
Yeah. And I think the reason why people aren't buying today is because they're used to only making properties cash flow
mm,
uh, when rates are at 3 or 4%. And yeah, that's easier to do because your debt cost is lower. But that also means that you're buying an asset that is much more fragile. If it's only if a property can only cash flow at 3 or 4% interest rates, that is a fragile asset. And real estate is supposed to be anything but fragile. It's
yeah,
supposed to be incredibly durable. And so if that's what your underwriting is based on, you're in for a world of hurt when you start coming into even still historically lower interest rates at 6 or 7%.
yeah,
So that's a recipe for losing a lot of money for your investors and for yourself.
I love that real estate is durable. I love that comment. I'm going to steal that, by the way. So
Do it. Yeah. It's that's exactly what it's supposed to be. It's supposed to be durable. It's not supposed to go anywhere over 20 or 25 years, even though the IRS lets you depreciate it, which is a great benefit. But it's 20 or 25 years in the stock market, it could all disappear. You could have a Black Monday and it goes down 20% one morning. But my real estate's not going anywhere. Yeah, the price might fluctuate. What people are willing to pay for it might fluctuate. What interest rates, are around might fluctuate. People are still living in my apartments, or people are still, renting our commercial space. It's fine.
Hey, I know
as
you're
long
big.
As you do your underwriting well, it's fine.
That's right. As long as you're conservative is what I always say. Hey, I know you're a big capital raiser. I know that you partner with a lot of limited partners, private equity people. What's that world like today for you?
It's definitely more difficult. I should say it can be more difficult. We have been fortunate enough to really be connected to a lot of people that need tax breaks. They're high income or high W-2 earners. And a lot of them are actually working towards rep status so they can take passive losses off of active income. And so that has created a little bit of a buffer for us in times like this, where we can syndicate our real estate deals, and these people are looking for the tax breaks that comes with accelerated depreciation and cost seg studies, which is changing as of next year, at least for right now. We'll see what happens with that. But it is definitely harder. And part of what I do also is help raise money for businesses, small, private equity sort of businesses. And that is definitely more difficult now, just because that space is less predictable. With the economy, people aren't as willing to take those sort of risks. But I will say one of the benefits of having a down stock market is that people are fed up. We work with a financial planner, and he's instructing people to take money out of the market and put it into durable assets like real estate, and we're helping his clients do that. And his clients are like, thank you for trying to do something different with my money than just saying, oh, well, we're just doing dollar cost averaging and all the sort of idioms that people put out there. It's an interesting market for capital raising right now.
Let me ask you this. Is it okay? So we had this really robust, last year, I think the stock market was up 27%. This year, S&P's down 20%. The Dow is down 27 over 20%. Is it smart for people to pull money out of the stock market today and put it somewhere else?
So obviously a disclaimer that I'm not a personal financial planner or advisor.
Yeah.
But I think it kind of depends. I think that in general, most Americans are overexposed to the stock market by at least a factor of 3 or 4 from where they should be. Okay. Most people should have their money in durable assets. I love to talk about what's called the barbell strategy. I'm sure some people are familiar with the barbell strategy, which basically means you have about 90% of your net worth in durable things, like in real assets like land, gold, silver, real estate, whatever it may be. And then with another 5 or 10% of your assets, you take moonshot bets. And that's things like, the private equity that we do for raising money for businesses, or bet on some pot stocks or whatever it may be. Bet on Tesla if you want to, although I wouldn't do that. And basically have nothing in the middle. The problem is that the majority of people that are passive investing in the stock market or with their financial planner, 90% of their stuff is in the middle. They're investing in index funds and Vanguard, whatever, and it doesn't go anywhere. And they put all of their savings into some passive funds that their financial planner is managing for them. I just think that it can be a recipe for disaster. At the very least, it's not the optimal way to manage your wealth. Yeah.
So interesting thought I just had. I have a guest on next week, and I love connecting people. So I have a guest on next week who's a business broker who I'm going to connect you and Matt because I think
absolutely.
what you guys will be a great complement to each other. So I'll make sure that I get that done for you today.
Thanks, Mike. That's kind of you.
And I always tell people, I say, look, I love connecting people and helping other people, have some connections with somebody else that can help move their business forward. And I think that that'd be good for you guys. If you know anybody who wants to be on this show on Thursday morning, I love to have people on that can bring a different insight and aspect. So, hey, as we wind this down and wrap up here, I have a couple questions for you. What just kind of off the grid here from what we've been talking about, but what's the best book you've ever read?
Oh man, the book that I read the most frequently, that's the best, that has instructed me the most, is obviously the Bible. Apart from that, I love Lord of the Rings. And so that, like, from like a fiction perspective, I like that kind of fantasy world. And then from the other perspective, there's a book that's actually sitting on my desk right here called Heaven by Randy Alcorn. One of the best books about heaven I've ever read. And it's not like nothing against the books about people that go to heaven and come back and talk about it. It is very like, just based on the Bible, this is what heaven actually is. And this is what the Bible says heaven is. Because there are so many misconceptions about what heaven is going to be. Just a long church service up in the clouds, and it's like that's not even close to what heaven is going to be. I think it just it really cements. It's cemented in my mind and in my life that there's something definitely worth living for, and there's a place worth living. There's a place that I am going to that is worth living for well now. Anyway.
I read that book, and there was a movie out too that was done by about that book. And Randy Alcorn is just awesome. He's got a couple other. I wish I could remember the name of another one I read by him. But how about best restaurant?
See, I'm not good at best stuff because it totally depends on the day. I would say best restaurant. I would say either one of two things: Pappy's Barbecue in St. Louis.
Okay.
Or right next door to Pappy's, there was a place still there. It's a place called Southern. Best Nashville style hot chicken ever, and they house made pickles, house smoked bacon. Collard greens. It was amazing.
Wow, might have to go to St. Louis.
It is awesome. It was run by a guy who won some like cooking competition, and then he ended up starting 3 or 4 like soul food sort of restaurants. And it was unbelievable, amazing food.
Awesome. Well, listen, thanks for being here this morning. How do people connect with you, Isaac, if they want to get a hold of you?
Yeah, so I believe there should be a banner with my email. It's just Schaefer, SCHAFER, @apeoplebrand.com. That's my email. I'm also on LinkedIn as Isaac Schaefer. And you can also find me on Facebook or Instagram under the same name. But yeah, absolutely. I'd love to hear from anybody if you have questions, if you want to connect from a business perspective. Like you, Mike, I love helping people. I love connecting people. As long as I can, add some value. I'd love to talk to anybody about what we do, or how I made the transition from medicine into the business world.
Nice, awesome. Hey, I'm going to move you out, and I'm going to say goodbye to everybody. If you hang out with me in the back for a couple minutes, we'll say goodbye. So,
sounds good, Mike.
Thanks for being here.
Thanks for having me on.
Yeah, you bet. Stand by. Hey, that was a great show this morning. I mean, I think we really dug down and got into some grit about underwriting and what the market's like and how to raise capital. And you know what? Take a look at what you're currently doing. Is it working for you? And if it's not, maybe an alternative asset is somewhere that you need to be, whether it be real estate or in a business. But, reach out to Isaac, give him a call, pick his brain a little bit. If you're looking for guidance or help, give me a call. I have no problem helping people. If you know someone who'd be a great guest, an interesting guest on this show, please reach out. Let me know. I always love to have interviews. Thanks for being